Yo, what's up, fam? Hey, Nation, that was crazy, man. Citadel just shorted my fucking stream. I know it. I know it for a fact. There's no way that was not a coincidence with the hundreds of people that were in here. That was the most that were in here the entire stream. And I'm not saying it was Citadel. I don't know who the hell it was or what happened, if it was YouTube or something, but how could that be coincidental? That YouTube all of a sudden just drops my stream for no reason. At midnight with a perfect, excellent connection, according to OBS and the stream analytics. Guys, I'm going to give everybody 2 minutes. See if many people want to come in. They can rejoin if anybody wants to. I'm just going to share it real quick while we wait. Spark up a cigarette here, man. That's crazy. I think I got most of my point out there on the video, even still. But yeah, I definitely wanted to bring up one last thing before. So I'm going to give the people a couple more minutes just in case they want to join. And if anybody wants to share, please feel free. Let me click that share button. And yeah, that picture was sitting in my graphics folder. I've been using that picture of Kenny G for a while now. And I absolutely love it. And I know that's what he looks like when he's worried. Jeff Bezos made the call, says Sinya. That's great. Yeah, Jeff Bezos didn't like the way we were going. I think he realized we might be on Amazon or some shit. So I'm going to have to edit these two videos together after this is over and put out one long video because I had one last very important topic to go over with everybody. And Citadel shorted the hell out of my stream. They did not like what the fuck we were saying. Maybe Congress, maybe Janet Yellen, old Yeller got pissed at me. Who knows? Oh, one more thing while we're here, fuck Stephen Van Meter. That YouTuber's been trying to stealing my Reddit theses and my YouTube posts for a while now. I'm getting sick of that guy. I'm gonna go fucking punch him in his nose. Sean, bogus. Ted, Samdor, Gunner, Eric, Mass, Sinya, Jay, everybody, Kiwi, thank you so much for coming back. And yeah, they shorted my damn stream. We were on a roll. We had hundreds of people in here about to finish up with a fabulous point, and they knew where I was going because they've seen my Reddit posts. They've seen my theses. My shit's been taken down by moderators left and right. Look, on AMC stock, on GME stock. It's crazy. Oh, good. Is this one still up? Yeah, but they did change my shit to tinfoil hat, those fuckers. When I had it set to speculation. That was Jeff Bezos, that dickhead. Oh, it was Rostin Beanham, I bet you. Where's he at? Hey, we got this wonderful debt ceiling issue. These guys have already said that they are not down for it. They're not having it. They're not having the pandemic spending. They're going to use this thing. And that these Democrats could do it by themselves, but they would have to use 51 votes of their own. That's never going to happen. That's never going to happen. These Democrats can't stick together enough to get 51 of them to actually agree on this to keep the Republicans out, and 100 Republicans have stated that they're not going to go for this bullshit. That's great. Check this out. From the New York Post, August 30th. If you wanted something a little more recent, House Republicans vow to not vote increased debt ceiling. They vowed. All right. 100 Republicans in the House are vowing in a new letter that they will not vote to increase the debt ceiling, calling it an issue, a problem created by Democrat spending. The ironic thing is that the last two times that this happened, the Democrats allowed Trump to raise the debt ceiling. And now that the shoe's on the other foot, the Republicans are not allowing the Democrats to do it. Oh, I love it. I love it. This is fantastic. And it's things like that that make me think that it could potentially be a coup between them. This quid pro quo going on, that they know that if they push the debt ceiling, that'll cause the stock market and economy to crash and real estate market because they're all in this gigantic, disgusting bubble. And not using this, where did it go? Not using the new filing 010, 2021-010 from the NSCC is going to prevent them from getting stuck with holding a gigantic ball of shit. So when all these stock market event crashes because of the debt ceiling issue, then we're going to see the mother of all short squeezes right there and then. Come on now. Sorry, give me 1 second. I'm refreshing this. For some reason, it just disappeared, which is not surprising since everything is disappearing. And they shorted my internet now. Hang on, guys. 1 second. That's bogus. Looking right here, Google, YouTube says that it's a perfect connection. It's an excellent connection. Yeah, it seems like it's crashing again. This is bullshit. Fuck you, YouTube and Reddit ass crooks. Let's go. Come on. But yeah, we've discussed the IMM dates. September 15th is a very important date for the futures rollovers contract. The IMM is international money market, foreign exchange and euro dollar futures contracts and options contracts. And the third week of every 3 months, March, June, September, and December, on the Wednesday, there are requirements that they have to roll these over again. And these are big buku bucks. Now, these are single name CDS, not the super senior synthetic ones we were talking about earlier. That's how old these are. These are one of the originals. So they've been kicked down forever. And as I showed you before, we've got the unsponsored BDRs that have been pushed through by Rostam Binam from Biden administration, the CFTC newly appointed head, and the previous one. These guys used to work together at the CFTC. Now this guy's in charge at the Futures Trading Commission, and this guy works for fucking Citadel now. That's who this asshole is. The daily Treasury balance went up by $100 billion because the Treasury bought a shitload of junk, sold a shitload of mortgage-backed securities and junk government bonds. But even still, because of FEMA spending, and even though they have already decreased that by $69 billion on one day, which was September 1st. Okay, so now we are back down to $296 billion left in the Treasury's account, and they are spending over $350 to $450 billion a month. They already cut Medicare and Social Security. They're not paying it. They're not paying it at all. Watch this. This is the daily Treasury statement from the Bureau of the Fiscal Service, fiscal.treasury.gov. Let's open it up in PDF, nice and clean. What do we see? This year they had 1.78 trillion, right? Where are we at now, guys? Hold on, minor issues. Oh, serious issues. There we go. All right, so they're spending way more than this. They're spending between 20 to $26 billion every single day. So they have had to systematically cut spending. And how did they do that? What was the first thing that they cut? Medicare. Medicare prescription drugs. They had spent $97 billion this year so far. And let's take a look here. Today, oh, look at that. They caught up a little bit. They spent $8 billion on the first. That's probably going to spend. But here's marketplace payments. And if you don't know what marketplace payments, that's like paying doctors, insurance companies, and hospitals. They're not getting paid. Indian Health Service, they didn't have much, but they're not going to get paid anymore, if anything at all. And the coup de grace, emergency rental assistance, eviction moratorium money. They have already dispersed, what does that look like? 33 billion. And that's still about 6% of the amounts. Sorry if my math was off earlier. 6% of the actual amounts that they allotted. But how much has been sent out this month? Nothing. How much was sent out on that day? Nothing. They're lying on our fucking GDP. They're lying to the American people about the strength of the economy, the stock market, the US dollar, and they're not paying the fucking bills, and Janet Yellen's using extraordinary measures in order to try to pay some bills. And extraordinary measures means not paying Medicare, hospitals, doctors, insurance companies. FEMA's going to have to struggle right now. FEMA doesn't have any money. One second. Citadel shorted my live stream. The Federal Reserve shorted my live stream. The Treasury, Janet Yeller, old Yeller was not happy with me. She didn't like what we were saying right before we got cut off. But hey, guys, take a look at what has not been cut. Federal salaries, they're in full swing. They spent $543 million on that today. They're going to pay their fucking selves, aren't they? What do we have here? Social Security Administration benefits payments. $916 billion have been sent out so far this year on it, and they immediately slashed it. They only sent out $224 million today. They have slashed it heavy. They should have sent out so much more. And the same goes in August 2nd. It'll probably be much less, and so on. Do you see what the problem is? So this filing being gone is not a bad thing, because they're not going to be able to, the government's not going to, DTCC and NSCC are not going to go bankrupt, and their insurance company is not going to go bankrupt, because they're not going to be left holding the bag. They're going to throw these guys under the fucking bus. They're going to throw the hedge funds and certain banks and market makers under the bus. And the Fed may come after the fact and bail some of them out, but I hope they don't do that to the hedge funds. Okay. Thank you, my guy Tony, for bringing this up to me about the new filing change today. This designation of a longer period going in November is good, because they're gonna fucking start the MOASS in September, and it's gonna go into October. I explained the reason behind that. We've got hurricanes here. Death toll has climbed to 41 in the Northeast just from flooding. And that's the flooding after the storms. That's from Hurricane Ida. And now Hurricane Larry's traveling this way from the Atlantic Ocean. And New Orleans looks 10 times worse. Let me keep going a little further. You saw the IMM security swaps, the future swaps. I show you guys the BDRs. Well, these are the ETFs. BTG Pactual. These are the crooks that got caught. The CEO, the sixth richest person in the world, according to Forbes magazine, he has $19 billion. The CEO of BTG Pactual was arrested and charged in 2016 with bribing senators. Okay. If you guys want to learn about CAT system, my buddy AC Biggums, you'll find him on YouTube. He's going to come out with a new, this is getting rid of the OAT system and implementing the CAT system. He's coming with a full due diligence. Right now, it should be out an hour in the morning. You can check that out as well. Whoops. Oh, that fucking crook. Look at that asshole. Here's another asshole. This is the senior Brazilian senator, plus the billionaire, which was the CEO of BTG Pactual, were both arrested and charged with Petrobras and Banco de Brasil, I believe it was Banco de Brasil, scandal. And yeah, Latin America's biggest independent investment bank as part of the corrupt investigation. Oh, 1 second, I'm on the wrong screen. So again, hold on there, calm down. This is how bad the numbers are for these fuckers. Okay. JP Morgan's got $52 trillion in derivatives unrealized losses, but only has $3 trillion in assets. Goldman Sachs, $50 trillion in losses. 288 billion in assets. CITIBANK, 46 trillion in unrealized losses and 1.6 trillion in assets. And then Wells Fargo's right there, right behind them. All right. So are you seeing why? Because these numbers are so high, we have $189 trillion in unrealized derivatives losses. The DTC and NSCC could take all the money that all these hedge funds have, all the money that these banks have, and the $76 trillion insurance policy, and it's still not enough. Because these, when you add them up, is 4 times the world's global the GDP. Okay, 4 times the entire world's gross domestic product. So all the money the entire world can make and produce and spend in one fucking year, it's 4 times that amount. They don't have it. And if they go bankrupt by doing this, using the 010 NSCC-2012-010 swap pawn shop program, they're going to get caught holding tons of liabilities, and they're going to have to print so much money through the Federal Reserve to pay back all of these that it will cause extreme hyperinflation, and our country will look like fucking Venezuela. All right. Moving on. Shit. So much for not a long stream, right? BTG Pactual Asset Management, the same assholes that were arrested in 2016 in conjunction with Operation Car Wash for bribery to the tune of $788 million, and thousands of people were arrested, causing the leak of something called the Paradise Papers, which is newly released as of several years ago. Look it up, you guys. The Reddit, the due diligence community, please. The Ape Nation. The Paradise Papers, not the Panama Papers. That's another one. It's the Paradise Papers is 13.4 million documents of overseas and offshore leaked fuckery with proof. These guys were arrested for bribery, and now they have 22,000 shares of GameStop in these various ETFs. That's why it's on the Bloomberg terminal. This terminal costs $25,000 a year. You think they're going to have a glitch? Fuck no. Capitalo Investimentos, they got 397,000 shares of GameStop. Only 80,000. I'm sorry. How many fucking shares of GameStop exist, guys? 73 million? These are all puts. These are only puts. Puts. So shares, shorted shares. Okay. This is filtered. You see calls not checked, puts checked. Everything here's got a P. This doesn't have a P and a 13F because it says multiple portfolios. So there's not just one. There are many of these ETFs. Many. All right, check this out. I'll keep it going for a little bit longer because I got a lot more I could show you. Deutsche Bank filing. Okay, Deutsche Bank is the DWS Investments SA owned by Deutsche Bank. There's an issuing company called X Trackers over in Luxembourg. The depository bank is State Street Bank International, and they do not have Deutsche nor State have the required assets in the same way that A2MC34 Citibank does not have the required assets, underlying assets, which are shares of AMC to the tune of 513 million. These guys don't have fucking GameStop. Look, search for GameStop. It's not fucking there. Because and I have downloaded the CSV just so I can show you guys. And if they do find it, if they are in there, cool. Let's see how many they got. But I already did this, so. Oh, what do we got? 6,579 shares. All right, let's mark it. So they got 6,500 shares, guys, for these ETFs. And that's it. That's it. That's the only sell found that states GameStop for Deutsche Bank. So Deutsche Bank only has 6,579 GameStop shares. This is their 13F filing. Okay? Proof right fucking here in front of you. Right here. This is the Deutsche Bank 13F directly from quarter 2, 2021. Okay? This is their value. This is the date it was filed. Okay? And what do they have? Or what were they showing on the Bloomberg terminal just a few weeks ago? How many shares? Ah, shit. That was not on this Bloomberg terminal. But it is here. Hold on. Because the link is, where the fuck did I leave the link? Right here. If this thing will ever load. Oh, where the hell did it go? Sorry, 1 second, guys. I got a million things open because I was showing you all this. Get rid of that. We've talked about this. We talked about this. These are the BDRs. This is the asshole you want to look for. He's probably a crook. This is the asshole that works for Citadel. These are our fucking enemies. Anyway, this guy works for Biden. They worked together before in the past, and now he's in charge of the CFTC. The daily treasury is in shit shape. They're spending $20 to $26 billion a day. On the first, they spent $69 billion. They're going to go fucking broke. They're going to default on the debt before they come to an agreement. I don't want to go. I lost my link here to my Twitter, and I don't want to spend 20 minutes scrolling for it, but I will try to find it quickly. Just got so many windows open that I've got to close something. Yeah, we're saving that. Deutsche Bank, I'm coming back for you, bro. Go back to my Twitter, click it, straight to that fucking DD. Leave you guys there for 1 second, all right? So again, as stated, if they were to use the processes in the filing for the DTCC and the NSCC, it would, for the 010, it would definitely trash things. For them and leave them holding a big bag of mixed garbage that they don't want to hold on to in any way. Okay. This is further down. Here we have iShares, MSCI. These are owned by BlackRock. This is BTG Pactual Asset Management. This is their 13F filing. It shows that they, all right, I'll get to that as well. But we were just talking about Deutsche Bank, so I'll just hit you with that real quick. Here's Operation Car Wash information, all of this. Again, this is part of the posts that were removed. Where the hell did it go? Sorry, guys. When my stream crashed a few minutes ago, it crashed a bunch of my tabs and windows. So I did lose where we were at, but I'm trying to pull it up for us. I'll leave you with this for a moment. Remember, this guy was in the scandal. This is the senator taking bribes from Petrobras, which is also held in all of these ETFs. And they put BDRs in these ETFs in order to abuse them. Okay. And they short the hell out of them. So even if they hold them offshore, it's still double the float. And by the way, Citibank only has 61,500 AMC shares, even though they're supposed to have 513 million at all times. But for some reason, and that was on my freaking Twitter, that's why I couldn't find that. Give me 1 second. Yep, here it is. Deutsche Bank, DWS Investment SA, 13F filing. They don't own zero. My bad. They own 6,500. They own 6,500. But this ticker is MSCI Brazil, UCITS, ETF 1C. You guys got to see this. Issued by X Trackers. This is a DWS. And or maybe not. Their website sucks. So one of those ETFs that's holding those baskets of BDRs, those Brazilian depository receipts, those certificates, they are not shares. And there's a 6-to-1 ratio. And State Street Bank International, it's the depository bank. The depository bank is, let me see 1 second. Yep, that is the right one. They should have it as well. So, you know, we're going to do a little live due diligence and we're going to go hit them up right now just to be safe for the 13F from the SEC. And we might even use the Fintel one if it's available. Looks like Bloomberg. No, it's not. So we'll go direct. And they might make you dig for it. They might make you go to another company to look for it in their holdings report. There's a different place I got to click. Subsidiaries of State Street Corporation. These are all the shell companies that State Street Corporation has, by the way, for all of you wondering. Mass Awakening, Debt, Jonathan, Sean, Jackson, Total, Kiwi. You know, thank you guys and gals for coming out. Thank you for your support. Let me know if you have any questions, okay, while I'm going through this. PDF, there it is. Here's their other included managers, their shell companies, register with the SEC. Here you go. There's their holdings. See what they got for GameStop. Nothing. One, where's it at? Oh, there we go. Ooh, what is this? What is this, guys? That's great. That's great because this must be calls. And let's see if that's the share value or if that's puts. One second. Let me scroll up real quick and find out. I'm pretty sure it's share value. That's a good sign. That's a good sign. Shares, value. Shares is here, value is here, times 1,000. Okay, so these guys hold a fuckload. This is good news. Wow. 1.606 million shares. So these technically may or may not be synthetic, but they still have to be accounted for in the total share count. And I think GameStop only has 73 million total shares. So this value here is in millions. So that's 344 million. I think it's $34 billion or 3.4 billion. Let's find out. Mm-hmm. And that's $344 million. Excuse me, my math was way off on that one. Let me double check my stuff. That's the value. Let's see what it's expressed in, most likely in millions I just took a guess. Damn, these assholes have a lot of money and leverage to play with. And that's why these things take time. And that's times 10,000, actually. Oh, okay, that's good to know. It's actually like this. Holy fuck. Holy shit. That is awesome. We have $3.441 billion in GameStop through State Street Bank. And that is just in Brazil. Or that's in America, but that's just to cover some of the BDRs that are in Brazil in this ETF. And we don't know exactly how many are supposed to be in there. That's the thing. We don't know exactly how many they're supposed to hold in this particular ETF. But I wanted to show you guys one thing. Does that look familiar? Petrobras, B3, Banco de Brasil. Does that look familiar? Because it looks familiar to me. This asshole was arrested along with the owner of BTG Pactual, another asshole who's working with all these guys at State Street, you know, and on these documents, and Constancia and Capitalo are up to no good. He was arrested and charged. The owner, the CEO, the billionaire CEO, the sixth richest person in the world with a net worth of $19 billion, were arrested and charged as with bribery and many other charges, obstruction of justice, as well as many people that were in the Senate and attorneys and thousands of others. Right, and they were all directly related to B3, which is the biggest Latin American bank. And who is dealing with these? What are the components of MSCI Brazil, UCITS, ETF1C? They're Petrobras, and B3, as well as a couple more, you know, funky names over here that I think are very suspect. This company, this one. Okay, they don't have a good reputation. Let's just put it that way. But I'm not going to badmouth them any further. So we can move on away from State Street. You know, State Street Bank. They do have a nice number of shares, around $3.44 billion worth. So I just give you an example of how much institutional ownership's actually out there, and how much actual ownership is out there of a stock that's only supposed to have 73 million. But somehow, you know, these guys have 1.6 million shares right there. So how many synthetics will go? Let's see. Because I can guarantee you that there are many. Let's see where we're at here. BTG Pactual, B3. Look at the overall score, by the way. This is the overall score for iShares MSCI Brazil ETF EWZ overview. This is another ETF in which BDRs are being used and abused. Okay? This says overall score of 1.8 out of 10. That's how bad these things are doing. And they're doing that because they're shorting the shit out of them. They're shorting the shit out of them in order to hurt AMC and GameStop and maintain their margin positions in other stocks. Wait for this to load. Look at what happened to them. This is the one-day chart. It should be. It usually is when I pull it up. Excuse me one second. I got one tab over here that's stuck. I got to close it out. Got a couple of them, actually. This is not great. Look at this look at this big, gigantic red bar. That's a massive institutional sell-off, you know, and the harder they will short this into the ground. This is pumping and dumping, shorting every 3 months for them. Now, you got to remember, this isn't just AMC and GameStop that are in here. They have lots of other funds in here, okay? They have lots of other funds in here. Let's get out of here. This page is dragging down my computer. My apologies, people. I can't show you this on this website. It's just totally tearing me down. For some reason, something's stuck. So yeah, I've showed you that Social Security benefits payments have been severely, severely slashed. We looked at the eviction moratorium money that has been severely slashed. You know, a lot of things. This is the day. A lot of people tell me they haven't received their tax refunds. That's pretty suspect. Probably not paying that either. But again, federal salaries, they're still paying those. We noticed Medicare marketplace payments, zero. And look at what they did with Medicare prescription drugs. That's nothing. They're still paying Medicare prescription drugs ever so barely, you know. Health services, Indian health services for Medicare, they're not paying it anymore. And they weren't paying much towards it anyway. So these things usually are on a schedule, but they usually get paid most every day. Check out the temporary assistance for needy families. I would like everybody to take a look at that because that's pretty clear. That's a negative number. That's a negative number in temporary assistance to needy families. That's not great. I know FEMA's on here as well, and we got to find that real quick. FEMA. This year, they've only spent $2.9 billion on FEMA. And today they had to spend $12 million alone on the first. And that's nothing. That's nothing. They're just getting started. They usually don't pay the bills for a few days. So they're going to spend a lot more on it in the coming days with everything, all the FEMA relief that's going to be required. But they're actually not. They're not paying anything towards FEMA right now. And the reason being is because they can't. They cannot pay FEMA. Let me get these out of here real quick, guys. Sorry. The annual performance for MSCI Brazil, Emerging Markets, ACWI, is negative 19%. That's by BTG Pactual. That one is being run by BTG Pactual. They are the asset manager of this. And I could not find a single fucking thing in regards to them having GameStop holdings. BTG Pactual does not have any GameStop holdings. Look at their returns, negative 16%, negative 14, negative 41, then some big positives, break evens, and then we're going back to big negatives again. And they're abusing the shit out of these things. Look at what it looks like in the 1 month. It is down because that's what they used to short AMC and GameStop and other meme stocks in other lesser meme stocks, I should say, in July. Understood? Are we going to go a little bit further down? Because I got something else to show you. Please don't look at the screen if you don't want to see some scrolling. Sorry about that. I showed you guys the futures contracts, so we're all well aware of this, and I don't want to show the same thing over and over again. I just want to make sure everybody is aware that these ETFs, these exchange-traded funds, these equity total return swaps and credit default swaps, they're all being traded shorter time windows, and they keep shrinking more and more the time that they actually have See how large these bars are? They're getting smaller and smaller incrementally in the date periods and the dates that they have to return these. So that's where we're going to see more and more volatility. And with everything going on with these, and with all these synthetic shares owned by BTG Pactual and CITIBANK and all these other cats, it's really going to squeeze them really bad, especially when you have hundreds of MSCIs like this. There's literally hundreds of them that all contain GameStop and AMC, as we saw in the last, a few minutes ago. Things are not looking good for them at all with this short squeeze. They're going to have to buy Banco de Brasil, Petróleo Brasileiro, Petrobras. Same guys, the crooks we just looked at, right? WEG, same as the other MSCI. Vale, the same as the other MSCI. Same as Itaú Unibanco, same thing. Natura, same thing. That means inside these companies, they're holding baskets of funds, BDRs, and these companies directly that are being shorted and abused. So they will go up and they will go down. When these scandals occur, these companies lose a lot of money. So 174 people were convicted in Brazil, not starting from that moment. There was international spinoffs like former presidents of Brazil, Peru, Panama, top executives at Petrobras, Odebrecht, and other firms. All right, and the list goes on. This was active all the way till 2021. And this leaked the Paradise Papers. I think that somebody asked, what do you think about AMC this Friday morning with the NSC-005 going into effect? AMC and GameStop are more bullish than ever. We are in the best position of our lives in order to capitalize on a situation in the stock market because these guys have over-leveraged to the tune of $190 trillion. So this started as a car wash, uncovering a car wash scandal of money laundering operation, Breaking Bad, anybody? And they became hundreds and hundreds of people, and they found out that penalties were paid by Petrobras ended up being, in the $800 million range as well. But they had to pay $790 million to Brazil, $2.8 billion more across Latin America and restitutions. And there was, hundreds of millions of dollars in bribes that they paid out. And it came out with the Paradise Papers, which was 13.4 million documents related to offshore investments that were leaked to German reporters. This guy, that you can easily find on Wikipedia or anywhere else. And this international consortium of journalists. So it went out to 380 journalists. And some of the details were made public on November 5th, 2017. And literally the stories are still being released these days. There's 13.4 million documents here. There's probably so much offshore fuckery in them that there's so much to be exposed. Odebrecht has literally become shorthand for this regional bribery scandal. It's been craziness. They paid bribes to Petrobras, to senators, to authorities, to cops, to, everybody. Everybody got paid. And maybe allegedly the fuckers over in the CFTC, Rostin Beanham, that fucking asshole. So yeah, this article is more than 5 years old, but it's more relevant than ever, plain and simple. Because it's the exact same people, the exact same companies, and they're doing the exact same things. And Brazil's corruption is rampant. Here we just saw the DWS. We know they've got 1.3 million shares of GameStop in puts. And we saw the Bloomberg terminal showing how many of those were strictly puts. So if we take that information, we know that those puts are directly related to them, to State Street Bank. And those are in GameStop as well. So BTG Pactual has 22,000 puts. Capitello Investment has 397,000 puts. Constancia Investimento has 720,000 puts. And you got to remember Susquehanna, Simplex, Jane Street, Citadel, Group 1, CESA, IMC, Wolverine. Okay, a lot of these guys are going to go hedge funds and market makers and banks are going to go bankrupt because of the issues that are occurring. And these guys not passing this regulation with 010, it is a good thing because that means they're not going to implement the pawn shop. Okay, so they're not going to borrow from Peter to pay Paul and try to slow down the market squeeze because they know they're going to go bankrupt if they do. So the MOASS is going to be stronger than ever. The mother of all short squeezes is not going to get slowed down in any way. The debt ceiling, the hurricanes, FEMA spending, it's all coming together. The $190 trillion in over leveraging, we're going to the fucking moon. This shill on Charles Payne's show was telling people that we're going to get to $60 easily, and then switching over to different subjects and starting to talk about other stocks that were doing really well. In my opinion, an attempt to get people to sell off at $60. And one more or two more last things I want to show you guys. If we can ever get to them on this shit. Let's see. Sorry, I'm not trying to, display my Twitter or anything. I'm just trying to find this damn thread. But I've done a lot of due diligence and crap lately and posted a lot of videos, so it's taking longer than I thought. You guys saw Citadel's top 2 holdings, when these guys need money, this is what they do. They go out and they sell off their stocks. They sold off massive amount on July 30th. On July 29th, after hours, they sold off massive amounts of Amazon on BDRs. And Microsoft, NVIDIA, BDU, all their top 10 holdings. Where are we at? This is what the bid-ask spread was looking, guys. Look at how strong the ask is compared to the bid. People are holding their ask price, knowing that their calls are going to be, they're going to come up and they're going to buy their calls. People know that these things are worth a lot, and they're holding on to it. Yeah, those guys, you guys, if you didn't see it, there's a lot of videos out there. It's just one quick short video just showing how bad the damage is in New Orleans and New York and Philadelphia, New Jersey. This is what it looks like out there. FEMA's going to need to spend a shitload of money to save these people. A lot. One sec, things lagging. Come on. Shit, not trying to post that up either. I did not mean to click that. My bad. Ah, perfect. Perfect. Check this out. This is what August is shaping up to look like. Oh, don't refresh. Okay, as long as it didn't take me to the top. It's my boy Astro. That guy Astro. What the fuck are you doing? This is what we looked like back in our June run-up. This was the same pattern. All right. And then we had the massive breakout during the swaps, the future swaps. Right? And you guys remember those future swaps, the graphic? I'll put it right next to it so you can see it. January, March, April, May, June. Here we go. This is this run up here. Okay. This 2-week period is reflected here. Okay. Right here. And now, this is a couple days ago. So today being September 3rd, this next period ends on the 9th. So we should theoretically be seeing a lot of green and big heavy candles of future contracts rollovers of all these total return swaps and futures contracts that we were talking about, and see another massive run up on both AMC and GameStop. This is the GameStop chart. But you want to know why it looks so similar? This is GameStop, this is AMC, because it's the same fucking stock. Because these BDRs in Brazil and around the country, around the world, are being held in the same fucking baskets. And they're being shorted to shit, to the tune of negative 19%, negative 40% yields on these ETFs for these guys. But they don't care. They don't care because they need to keep the price down, or otherwise they'll just go entirely bankrupt. And whose money is in those BDRs? Investors. So they're fucking investors in Brazil to fuck investors in America and North America that are invested in these, and European apes, German apes, etc. Because I know there's a lot of apes in Germany and Norway and Sweden and other places, and we love and appreciate you all. Thank you, Ape Nation. It's been an absolute pleasure, being with you guys and getting to go through this journey with everybody, especially since a lot of people are going to be absolutely wealthy. So this is where we're at now. Run up, runs down because they're desperately getting people to paper hand. And this is what we saw in 5-6. Massive run up, run down because they're trying to get people to paper hand. And what happens next? This fucking boom green candles that brought AMC from the $13 range up to $70 range. And in case you're wondering, I bought shares and options calls from 13 all the way up to 70. I bought options all the way up, shares all the way up to 70. And I was buying options throughout that as well. And I was selling them as well. There's nothing, not shares. I've only been adding to my share positions, but calls and things like that, I think are a good idea if you know what they are and how to use them properly. And these cycles, futures cycles, really help to, figure out, you can use these algorithms on a daily basis to help you decide, okay, today's going to be a green day. I'm going to play it on the way up. Today's going to be a red day. I'm going to play the algorithm as it goes through the channel, and there's a lot of ways that you can make money with this to beat Citadel at their own game. Just make sure you're not going for deep out of the money weeklies that expire in a few days, because that's fucking stupid. Go further out if you're going to get share options. All right. And lastly, my buddy Rizzo Stonks posted this up. It's a great correlation between market crash and various conflicts. This is what happens when certain events occur, like World Trade Center or other bombings or 2-year internet bubbles, the .com crash. It took 50% crash in 2 years with the .com bubble. And it took 4 years to recover for the same things. And this was way back in 2002, and all of the problems that we've had have been compounding. Okay. And then again, immediately after, it was down again 42% in a year because of the bad regulations. And what do they do when Dodd-Frank was passed after 2008? And when they passed Dodd-Frank in 2010, they just moved this shit overseas to Brazil and the Cayman Islands and Africa and Luxembourg to be able to, short these stocks further in these baskets. It's just really as plain and simple, as clear cut as this. So we already know that we're going to have options going all the way September 9th for these futures rollovers contracts. I meant to say not options. And additionally, we're going to have further closing out happening on the 15th when the futures contracts from January are starting to mature. So September 15th is another important date. And that's not what I meant to click. Where the hell am I? I'm at freaking bookmarks. My bad. So I think that much wraps it up. If you guys have any questions for me, throw them at me, all right? Throw them at me. No worries there. I think I've explained pretty in depth several times how this is going to occur, and what makes it so simple because this default is looming pretty quickly, I should say. And that's the reason that I'm on YouTube, is because other people need to know about this. We already know as apes, but my mom had no idea, for example. I had helped her with her 401k because I know what's coming, and I'm not going to let her lose a bunch of her money right before retirement. I don't think anybody should. So I think Americans need to do, and people worldwide need to do their due diligence and decide what's a good bet for them and what is the smartest move that they can make when you've got issues like this at hand. Because inflation is not transitory. That's a fucking joke. Congress isn't coming back to the 20th. They'll have 9 days to talk about it. And this is where I'm going to wrap up, because this is what I was getting at the whole thing before Citadel and fucking Federal Reserve and Janet Yellen shorted my stream a little while ago, and all the whatever 800 of us that were in here all just got kicked out of nowhere. They're trading everything on fucking dark pools. 61.8% of all their volume is traded on dark pools. 98 to 99% of all foreign exchange fiat and such, and foreign exchange futures contracts are being traded on dark pools. 98 to 100%, literally. Because I showed you guys in one of my last videos that's exactly what the numbers were. And that's from the OCC.gov report, the Office of the Comptroller of the Currency. Here it is again, showing us that credit default swaps, the ones we just got done showing, for holding companies, shell companies, are up 1,600%. That's overseas. That's 200% total trading revenue that they've increased. So that the banks have moved 200% more money into them and have increased their credit default swaps by 1,600% because they're having to roll over these futures contracts. And these futures contracts windows for rollovers are getting smaller and smaller and smaller. And then the banks, on top of that, commercial banks, their actual credit default swaps is down up 3,400% as well. So you got to take 34 and add it to the 16. That's 5,000% increase in credit default swaps. Foreign exchange futures contracts are up 192% for these guys, and up 2,769%. I just realized why the foreign exchange is up so high in foreign holding companies. These holding companies, these shell companies, are doing these futures rollovers so aggressively and rolling them over with such a high rate that they have literally increased year over year by 8,353 millions, which is, what is that, $80 billion? Or $835 billion. It's a lot of fucking money. But anyway, that's increased to 2,769% from last year. Fuck you guys. This is how they're fucking us, and this is why they're going to go and destroy the stock market, destroy our economy, destroy our real estate market, and the only people that are going to be in the top 1% of Americans for the most part of stock market investors are going to be people that are invested in AMC and GameStop, in my non-financial advice opinion. Look at their fair values. Gross positive and negative are all down solid. This is their total notional derivatives liabilities. All right, that's $190 trillion. And 89% of this is owned by 4 fucking banks. And you can see how much of it's in the future. Yeah, the majority of it is in futures and forwards. They've got, what's that, 40? No, not the majority of it, but a lot of it. A lot of it. And that's expressed in billions of dollars. So it's 189,000 billions, which is 189 trillion. So this would be $40 trillion, 107 trillion. Yeah, you got $41 trillion in futures contracts, $107 trillion in total return swaps and equity total return swaps, $37 trillion in options, mostly puts, and another $3.3 trillion in credit derivatives, for a total notional unrealized loss of $188.988 trillion. There you go. Best part about it is that this number, 189 trillion, 168 trillion, those don't include naked shorts. They don't include synthetic shares. They don't include the failures to deliver that have been hidden, the shit that's been shorts that have been marked as long because they're cooking the books, the BDRs and certificates and all this other stuff that's being, triple manipulated over in Brazil and overseas in Cayman Islands and Caribbean and Luxembourg and everywhere else around the world. And we've been peeping these federal H8 liabilities reports every single week. And this is not one of the most recent ones. But as you can see, the majority of their derivatives liabilities have increased significantly over and over again. And at that point, they had increased failures to deliver by $50 billion. I'm sorry, $50 million in 1 week. No, sorry. $802. This would be 18 trillion. This would be 802 billion. Yeah. $50 billion in the matter of FTDs have increased by $50 billion. Failures to deliver have increased by $50 billion in 1 year. That's not the synthetic shares. That's not a naked shorts. That's not the shorts. That's just the failures to deliver. All right. And that's only on 1 out of 11 tables. There's 10 more tables that still have to be added to that 50 billion. That's 1 out of 11. All right, hold on. Let me get back here. Where's the debt ceiling? We know what happens here. Hold on 1 second. So we all know that the debt ceiling expired, at midnight on 7/31, and we're going to be going into that heavily in the next few days and weeks because it's extremely important. And we're completely out of extraordinary measures here. We've seen the numbers. They're spending between 20 to 26 billion on average. And on the 1st of September, the U.S. Treasury spent $69 billion. They've only got 290 billion left. And they've got to get all the way. They've got to get really far. And I'll tell you why, because the government doesn't have to shut down, but it probably will. All right, where's the debt ceiling? Sorry, 1 second. This was just the last 2 times that we've had these issues. In 2013, it took them from September 19th to October 9th to come to an agreement on the debt ceiling. September 19th, they started. And this year we're starting on the 20th. All right. And now we've got this infrastructure bill that they're talking about, that they're arguing about. And 100 Republicans have stated that we saw earlier are not going to agree to it. And that would mean that 51 Democrats would have to fucking agree. 51 out of 59 Democrats. 51 out of 59. They can't agree together for shit. In 2013, the SPY lost 5.2% in this short time period. All right. And that's a lot of money because there was also a lot more movement involved with it, as well as our credit downgraded twice. And in 2011, when it happened, the Dow Jones dropped 635 points in 1 day. $2.5 trillion was lost worldwide in 1 day. The S&P 500 index lost 6.7%, and all 500 stocks fell for the first time. These are not good numbers. And we don't have to default on the debt, but this time it will probably happen. And that will further accelerate the stock market crash, and that will further increase the liquidations and the mother of all short squeezes. And guess what happened back in 2013? Extraordinary measures, right? To enable the continued financing of the government. Back then, they had a lot more fucking money and a lot less debt and a lot less inflation and a much stronger economy and real estate market. Understand? And who was it? John Boehner, Mitch McConnell, the same fucking guys that are doing it now. They know what they're doing. And what else? A survey of 38 economists found that 84% of them agreed that a separate debt ceiling that is periodically increased could lead to uncertain and poor fiscal outcomes. These people are fucked. And back then, Obama had to skirt around them to get this. So the bill was passed in the Senate 1 week previously by a vote of 64-34 with all no votes from Republican senators. At the time, there was more Democrats. And they were all critical. The Republicans were critical of the lack of spending cuts. And they're saying the same shit that they're saying now, except now Republicans own the House. Developments during suspension. Why is this important? Because that's what's going to happen right now. That's what's going to happen from September 20th through October 1st or a few days into October, for sure. The government will default. This U.S. Treasury will not have enough. They will default on their debt this time. And people say that that's not possible, but it is, because when they don't make the interest payment to another country, that's going to cause extreme tension because it's a lot of interest. So they were having all sorts of arguments, and the president released his own budget. They were having really big issues. And then they reached it again, on May 19th. Okay. And then in August, the Treasury informed Congress that the debt ceiling was not raised. The United States would be forced to default sometime in mid-October. And they got all the way through October 9th. At the time, on September 25th, they announced extraordinary measures would be exhausted no later than October 17th. But now Janet Yellen's telling us completely different shit. She's telling us and SIBO is telling us that they don't know how long it's going to be. I mean, how long they're going to last. And we've already seen the numbers. We've looked at them. Yellen told us that the U.S. could run out of money by using extraordinary measures by September, quote unquote, soon after Congress returns from recess. But they also said that uncertainty driven by the coronavirus pandemic and the federal government's fiscal response has made it harder to pin down exactly how long the U.S. to avoid a default. So she's telling us it could happen anytime before. She's telling us it's uncertain how long and it's harder to pin down. Guess what wasn't happening back then? There was no Hurricane Ida that destroyed New Orleans and New York and New Jersey and Philadelphia on completely opposite coasts. There was no Hurricane Larry coming in. There was no FEMA required. There is now. There's a shitload of FEMA spending required. Millions of Americans need help, have no water, are waiting 4 hours in line to get gasoline, have no place to live, no electricity, no gas to cook with or heat their homes or run their electricity or their air conditioner with in 120-degree weather in Louisiana. Fuck, they can't even be in their homes. Their homes are underwater. You saw the video? Okay. And the SIBO estimated the exact date on which Treasury would have had to begin prioritizing bills and are actually defaulting on some obligations would fall between October 22nd and November 1st. Right now, SIBO already told us that they don't know when it could fucking happen. Janet Yellen has told us that they don't know when it could fucking happen. And this was an estimate. Most likely in October, November, when they didn't have any of these other issues going on with the hurricanes, with FEMA, with the COVID pandemic getting worse, with inflation increasing at levels they didn't expect. Because they predicted inflation to be at 2%, when in reality it's at fucking 6.1%. Jonathan A says, all my fucking savings went in AMC. I hear you, brother. That's not, everybody teaches his own, I've YOLO'd a lot of money into AMC and GameStop, and I could not be happier. I can't wait. I can't fucking wait. I can wait because it just means that, we're going to be going, much further. But yeah, that's what we're looking at. We're going to look at a government shutdown as of October 1st. They're going to come back on the 20th. They're going to argue about it for these days. And they don't have to shut down on the 1st, even if they do to come to agreement, say on the 30th, the stock market will definitely start crashing and correcting really, really hard way before they get to the 30th. Any one of these days or even before could be extreme, massive market sell-offs that leave people's 401ks, pensions, and retirement plans completely in the dirt. Much, much worse than we ever saw in 2008 and worse than any of us have ever seen in our lifetimes. Because it's the first time that we ever having an eviction moratorium, a real estate crisis, hurricanes, government shutdown, debt ceiling issues, hyperinflation like we did in 2008. It's the first time in history we're seeing all this, and our economy is the weakest it's ever been. Our entire GDP almost consists solely on government spending, federal, local, and state law spending, and people, Americans, spending stimulus payments on used car parts and takeout. And because Americans can't pay their rent or their mortgage, that's why Americans have lost $2 trillion, more than 51% of their entire savings and investment accounts in the second quarter of 2021. Because we had 4.07 to begin the first quarter, at the end of the first quarter, and we left the second quarter with 1.97 trillion as Americans. And because of inflation being so bad, we all have to spend $700 more a month in order just to live the same lifestyle we had 3 months ago. So you decide for yourself what you think is going to happen. Okay? Because it's pretty clear cut to me what's going down. And the government agencies, they were reevaluated, to A to A minus. They went to rating watch negative. They maintained a negative outlook. And our economy was strong at that time. And it's not anymore. And we can't print more money to get out of this because it'll increase hyperinflation even further. We're going to look like Venezuela if they try to do that. And also, USA, that's why Biden pulled out of Afghanistan. I forgot to tell you guys. That's why Biden pulled out of Afghanistan, to reduce military spending during this debt ceiling crisis. Why do you think the timeline was to get them out by the middle of August or the end of August? They'll pay us. The DTCC and NSC's got insurance. All these hedge funds are going to go fucking bankrupt and broke. All right. In 2011, there was an ongoing political debate in Congress about the national debt and deficit. All right. Led to the passage of the Budget Control Act, and it didn't do a goddamn thing because they're doing the same thing over and over again. On July 31st, 2 days prior to when the Treasury estimated the borrowing authority of the United States to be completely exhausted, Republicans agreed to raise the debt ceiling. But what happened before they agreed? Negative real interest rates. Negative real interest rates. Okay. So people asking me about bonds and 3-month Treasury yields and 10-year Treasury yields going negative. It's already happened. It's happened in 2020. It's happened in 2011. It happened in 2008. It's going to happen again. Here we go. All right. None of this I want to go over with you guys because I don't want to go into all this detail with you, but I just wanted to give you an example of closely things mimic everything that's happened in the past, and that these people are the same Republicans and same Democrats that were in Congress back then. So they know exactly what's happening. They know they're on vacation. We could have a government shutdown on October 1st. They don't come back till September 20th. All 50 Democrats have to agree. 100 Republicans have already strongly vowed not to agree to the debt ceiling raise until they've come to a better agreement. The infrastructure bill is going to take American freedoms. It's going to destroy a lot of cryptocurrency and regulate it heavily. And they're going to try to come out with a United States cryptocurrency, kind of like China is right now. They announced it back in May that they're coming out with a digital yuan based off blockchain and partially backed by gold. That's why America and China have been buying up gold. A 2015 report from the Government Accountability Office analyzing the 2013 debt ceiling standoff found investors reported taking the unprecedented action of systematically avoiding certain Treasury securities. And that's exactly what's happening right now with the RR market. They are not spending any money on the 3-month, the 5-year, the 1-year, the 10-year Treasury, or anything in between. It is all going into the 1-day repurchase, reverse repurchase agreements. It's called the RRP, reverse repo. And they're putting more and more money into it consistently. And we were at the levels back in 2020 before quantitative easing started. Quantitative easing is a fancy term for printing a fuckload of money and giving handouts. Went from zero at the middle of 2021 here, back in February 16th, we're still at zero. And now, not too long. Notice how it was February 16th. It was about not long after the GameStop and AMC runs. We had January 12th, nothing. And then after that, after the actual runs in late January and early February, then we started to see an increase, and then an ever higher increase in these funds going in here. And now we have 17 days in a row where the reverse repurchase program has been over $1 trillion, and it's going to continue to climb. As of September 2nd, it was 1.06 trillion. It decreased ever so slightly. And that's okay. That's normal, probably because they had to spend a bunch of money to roll over their futures contracts. So they have less liquidity now. Less liquidity means what? Less prepared for the mother of all short squeezes. They have to increase the other shell companies that I showed you earlier. They all now, instead of having 10,000 apiece for every shell company, they need to maintain 250,000 apiece. So that means when previously they only needed $40,000 for 4 shell companies, now they need $1 million for 4 shell companies. That's why Citadel took back $500 million from their investment in Melvin Capital, their $2 billion investment in Melvin Capital after the GameStop squeeze. And Melvin Capital is still down 43% since January. Yup, Yellen sucks. Biden is dog shit. They're all dog shit, all of them. So we've seen what happens. You know, the liabilities have continued to grow in massive amounts to the $190 trillion range. You know, the table 2 increased 15.687 trillion in unrealized derivatives losses, securities, swaps in 1 year on one table alone. $15.687 trillion in losses gained out of the 11 tables on the federal H8 report that I show you guys every Friday or every Saturday, because it comes out Friday at 4:15 p.m. Eastern. So that just goes to show you just how bad, you know, things are, and any sugarcoating of it would be complete bullshit. So have you seen Forex, the futures trading market for shell companies is up 2,700%. The credit default swaps are up 1,600% for shell companies, and their revenue is up 200% because that means banks have increased using them by 200%. And now also the foreign futures contracts for these banks have increased almost 200%. The credit default swaps, 3,400%, and their trading revenue is up 56% because of the massive amount of money the government has printed and the money that Americans have paid to the banks because they owe so much in back rent, back mortgages, and back, you know, credit card debt. So the money is seeping back into the economy when the Fed, the original reverse repurchase program is meant for the Fed to receive money from banks and burn it up, literally spend it and burn it away to reduce inflation. But they can't continue to do it fast enough. And that's what's causing hyperinflation when you take into account the low supply of goods due to the supply chain issues. I own multiple companies in logistics and distribution and trucking. All right. Things are terrible. Most rail yards, ports across the nation are between 1 week to 4 weeks out, when usually they're between a few days to a week or two, max. Minimum 4 weeks or more. Okay. You go to certain rails, you know, certain rail yards, ocean container ports around the country, and they're backed up 2 to 6 weeks. And ocean containers are sitting for months on their docks, and because they're not able to get enough manpower and enough people working and enough trucks in there and truckers to run this, to get these containers and this freight out of these rail yards and ocean ports. So these ships are sitting offshore, right offshore of the United States within a few miles for weeks and weeks, sometimes months on end, because supply chain issues are so bad. So if you've ordered anything from overseas, from China or Europe or wherever, and it's taken 2 months to get here and it's still not here, that's fucking why. If you go to Walmart or your grocery store and you see that they're running low on toilet paper and goods and baked goods and certain cereals aren't in stock and certain this and that and the produce is low, that's why. There's not enough truckers to handle it. There's not enough people to work in the offices to facilitate the orders and to give the actual shipments, the transportation, the paperwork in order, the actual movement of ships and rails, ocean freight and air freight to airports, truckers to move them nationwide to our grocery store shelves. There's just not enough, nowhere near. And people say that it's due because we can't pay enough money. But we've, not just my company, but all companies have been increasing pay rates exponentially, it feels like, and there's still not enough people willing to work for those prices. Why? Because of the amount of money that was given out by the government for stimulus, as well as the diminishing returns in the market. So although supply chain is at record high revenues, our expenses are also at record high because of low supply and demand, high gas prices, inflation, high maintenance and repair costs for these vehicles, tolls, fuel charges, demurrage, storage, the list goes on. I won't even get into it any further because you guys will fall asleep. So yeah, that's what we're fucking seeing. Supply chain shortages mixed with the printing of money, the stock market collapse, real estate market collapsing, eviction moratorium. 8 million Americans, 6 million are going to be evicted potentially. 2 million are currently seeing bankruptcy, and that number will increase all the way through March 2022 and then some. Whether the stock market crashes before that or not, this is still going to happen with the real estate market. It's an inevitability at this point. So there we're at, guys. We know that grew beer grew all. We know that the SEC have been trying really hard to implement new deals and new paperworks and documents and filings. And these guys, they say, you know, the SEC is committed to rooting out fraudulent attacks on our financial markets by bad actors in the United States around the world. And I believe them. I think they really are working hard to get these, you know, with all these new filings over the last few months. They have no choice but to do so. Because if they don't, it will crash the entire stock market. And the United States will lose the vast majority of its power. The United States dollar would lose the vast majority of its value. And we would be in a Venezuela situation in a heartbeat. In a heartbeat. So they have put off NSCC-2021-010 until November with a 45-day extension because they believe that this debt ceiling, or they may even be orchestrating this debt ceiling crisis to pop the bubble and leave the American people, the public, holding the bag while the banks and the Fed rip their money out of the stock market, all within a matter of a day or less, or a day or more. But it's going to be one massive drop after the next for these blue chip stocks, for the stock market. And when that happens, it's going to cause liquidation and margin calls of many, many hedge funds, brokers, broker dealers, prime brokers, and even market makers and banks. And Citadel Securities may go completely bankrupt. And as a hedge fund, Citadel Securities only has 17 investors. 17 rich fucks give Citadel Securities $70 billion. They have about $70 billion of which in assets, of which they have $67 billion in liabilities. So, speaking of liabilities, unrealized losses, Citadel Securities has $67 billion worth, but they only have $71 billion in assets. So they're barely able to maintain their position in Citadel Securities. So they're using all sorts of tricks by pumping and dumping crypto over the weekends and overnight in order to make more money and to maintain as much liquidity as they can for now. It's not going to last long. It's going to be over soon, in my sincerest opinion. And this is not advice. Financially, you should use your own head and your own due diligence to decide what the fuck you want to do with your money. And this is, you should not be influenced by what I'm telling you. You do your own due diligence based on what I'm telling you and decide for yourself. So I just want to say thank you to everybody. I want to say thank you to Jackson Hunter, Dave's Daily Trades, you know, everybody on the community from Twitter and Reddit. That isn't a show on Reddit. Everyone on Twitter and the spaces. Thank you, everybody, for listening and for your support. I hope I cleared some of the information up about the 010, but it truly is a good thing for us, for the mother of all short squeezes, because they will not be able to slow down the mother of all short squeezes. They will not be able to borrow from Peter to pay Paul and then get fucked over by John. You know what I'm saying? So they're going to be better off. And then even if all these companies do go out of business, we're going to get all that money is going to pay our fucking tendies and then the broker dealers. And then we might hit the DTCC and NSCC $76 trillion insurance policies as well. So we're looking great, everybody. I hope that you take everything I said with a grain of salt. And thank you very much for your support, everybody. NSCC 010 does not go into effect in September. It has gotten pushed back in November. I'm saying this again because I saw somebody ask it in the chat, so I'm just reiterating. Okay, 010, we don't fucking need it. We don't want it. We want it to be pushed back post MOASS. This is a good thing for us. And you want to know one of the reasons that I think they did it is because they know that this asshole, Rostin Beanham at the CFTC, did this, extended the phase 6 requirements for these guys that are overseas. They know the fuckery that's going around with BTG Pactual back in 2016, Brazilian senators, and all the Petrobras kickbacks. You know, all these guys that were getting arrested, the sixth richest person in the world, Andre Esteves, you know, taken into custody and arrested and charged with bribery and all sorts of other things. And this is more relevant than ever because these are the same guys, BTG, these are the same guys that own those GameStop puts, that they're based out of New York and Brazil. They got multiple companies. They own those GameStop puts that are on the Bloomberg leak terminal that Bloomberg claimed was a glitch. It's not a glitch. All those ETFs and all those puts are 100% legitimate. And those companies are fucked because we saw 1.2 billion puts from those 3 companies alone. 1.2 billion puts, shorts that need to be closed out. So yeah, this is me. You know, I can't wait for this because I ain't selling until they fire Janet Yellen. Fuck that bitch. Let's get the fuck out of here. Have a great night, Ape Nation, and a great day. I think September 3rd is going to be a beautiful day on the stock market for AMC and GameStop. Fuck. Good luck to blue chips. That's all I got to say. Appreciate you guys.